Hello, friends. We are heading into July 2026, and there are 5 things happening right now with Social Security and Medicare that every senior needs to understand, one of which quietly started today, and none of which will arrive with a personal letter explaining what it means for your check. I'm going through every one of them in order of how urgently you need to act. Before we start, if you find channels like this useful, subscribing helps you catch these updates before they catch you off guard. Let's get into it. The first thing happening right now is the one most people have never heard of, and it directly determines how much more money shows up in your check in January 2027. Today, July 1st, marks the start of the 3-month measurement window the government uses to calculate next year's cost of living adjustment. Every year, the Bureau of Labor Statistics tracks the Consumer Price Index for urban wage earners and clerical workers CPIW for short during July, August, and September. The average of those 3 months, compared to the same 3 months last year, becomes the official COLA. This year's COLA, the one currently in your check, was 2.8%, which raised the average retirement benefit from $2,015 to roughly $2,071 a month. That number was locked in using last year's July through September data. Right now, the clock is running on the number that will replace it. Nobody knows yet what that number will be, because it depends on what happens to gas prices, grocery prices, and rent over the next 3 months. If inflation stays where it is or ticks up, the 2027 COLA could land close to last year's level or slightly higher. If it cools off, it could come in lower. The Social Security Administration will not announce the official figure until October, and it will not affect your check until January 2027. But the measurement that decides it started today. There is nothing to do about this one except understand it, but understanding it means you won't be caught off guard by whatever number gets announced in the fall, and you won't be fooled by anyone online who tells you they already know what it is. Nobody does yet, including the government. The second thing is a cost most seniors are still adjusting to, and if you haven't checked your numbers recently, you need to. At the start of this year, the standard Medicare Part B premium rose from $185 a month to $202.90, an increase of $17.90, which works out to just under 10%. That's one of the larger jumps in the program's recent history. Alongside it, the annual Part B deductible climbed from $257 to $283. If you're admitted to a hospital under Part A, the deductible for that first benefit period also went up, from $1,676 to $1,736. Here's the part that catches people off guard. Because most beneficiaries have their Part B premium deducted directly from their Social Security check. This year's COLA increase was partially eaten by the premium hike before it ever reached your bank account. Out of that $56 a month average COLA bump, roughly $18 of it went straight to covering the higher Part B premium. If your income is above certain thresholds, and this is based on your tax return from 2 years prior. So your 2024 return is what's being checked right now. You may be paying an income-related surcharge on top of the standard premium. And that adjusted range runs from $284.10 all the way up to $689.90 a month, depending on your income bracket. If you had a one-time high income year in 2024 from something like a large retirement account withdrawal or the sale of a property, and your income has genuinely dropped since then, you can request what's called a new determination from the Social Security Administration. This isn't automatic. You have to ask for it, and you'll need documentation showing the life-changing event retirement, divorce, loss of a pension, and so on that justifies the lower rate. If you've never checked whether you're paying an income-related surcharge you don't actually owe anymore, this is worth 10 minutes of your time this week. The third thing is the one that should actually worry you, not because it's happening tomorrow, but because the clock on it is now shorter than it's ever been, and the debate over what to do about it is happening in Washington right now. The 2026 Social Security Trustees Report, released on June 9th, moved up the projected depletion date for the retirement trust fund officially called Old Age and Survivors Insurance, or OASI, to the fourth quarter of 2032. That's 3 months earlier than what last year's report projected. Here's what depletion actually means. Because a lot of coverage on this gets it wrong, Social Security does not go bankrupt and does not stop paying out. The program is funded primarily through payroll taxes, and those taxes keep coming in every year regardless of what happens to the trust fund. What depletion means is that the trust fund's reserves, the cushion built up over decades, run out. At that point, incoming payroll tax revenue alone would only be enough to cover about 78% of scheduled benefits. Multiple independent analyses, including one from the Nonpartisan Committee for a Responsible Federal Budget, put the resulting average cut at roughly $500 a month for a typical retiree, with the number even higher in some states depending on the local cost of living and benefit mix. That is not a guess about the far future. This is what happens under current law if Congress does nothing between now and late 2032. And Congress is aware of the deadline. Proposals currently being discussed include raising or eliminating the payroll tax cap, which currently sits at $184,500 of earnings for 2026, meaning income above that amount isn't taxed for Social Security at all. Other proposals involve adjusting the retirement age, changing how the COLA itself is calculated, or some combination of tax increases and benefit adjustments. None of these have passed. None are law. The Disability Insurance Trust Fund, by contrast, is in solid shape and is projected to keep paying full benefits through the end of the 75-year projection window. So this specific warning applies to retirement and survivor benefits, not disability. The reason this matters to you right now, in July 2026, is simple. The shorter the runway gets, the more abrupt any eventual fix is likely to be. Analysts on both sides of the aisle have said the same thing. The longer Congress waits, the harsher the combination of tax increases and benefit changes will need to be when they finally act. This is not a reason to panic. It is a reason to pay attention to what your own representatives are proposing. Because whatever passes, if anything does, will affect your check directly. The fourth thing is good news. And if it applies to you, it may already be showing up as extra money you didn't expect. If you're a retired teacher, firefighter, police officer, postal worker, or other public sector employee who also worked in Social Security covered jobs, you may have spent years having your benefit reduced or eliminated by two rules called the Windfall Elimination Provision and the Government Pension Offset. Those provisions were repealed by the Social Security Fairness Act, and the SA has been working through a backlog of retroactive payments and adjusted monthly benefits as a result. If you fall into this group and you haven't checked your account or received a notice, log into your My Social Security account at ssa.gov and look for any updates to your benefit calculation or a retroactive payment notice. This has already meant meaningfully higher monthly checks for a large number of retirees who spent decades being told their benefit would be capped because of a pension from public service. If this is the first time you're hearing about it, it's worth checking your account today rather than waiting for a letter that may or may not arrive quickly, given how large the backlog has been. The fifth and final thing affects every single person watching this, and unlike the others, this one isn't about a policy change, it's about staying ahead of the people trying to take advantage of everything I just told you. Every time there's a real, confusing, headline-worthy change to Social Security or Medicare, a premium increase, a trust fund warning. A new law scammers use the confusion as cover. They call pretending to be from the Social Security Administration, telling you your number has been suspended, that you owe money because of an overpayment, or that you need to verify your information to keep receiving your new COLA increase. Some of these calls now use AI-generated voices designed to sound like a specific SA representative. And some scammers have used data from past healthcare breaches to sound alarmingly well-informed about your specific medications or provider. Here is what stays true no matter how convincing the call sounds. The Social Security Administration will never threaten to suspend your Social Security number that isn't a real consequence and never has been. SA will never demand payment by gift card, wire transfer, or cryptocurrency. SA will never ask you to pay a fee to receive a COLA increase. Because COLA increases are automatic and require no action from you, ever, SA will never ask you to keep a phone call secret from family members. And the government does not create urgency over the phone it communicates by mail, and it moves slowly by design. If a caller is pressuring you to act immediately, that pressure itself is the biggest red flag. If you get a call like this, hang up, and if you want to verify anything about your account, call SA directly at 1-800-772-2113 or check your account at ssa.gov rather than calling any number a caller gives you. You can report suspected fraud at oassa.gov. So here's the full picture heading into the rest of the summer. Today marks the start of the 3-month window that will determine your 2027 COLA, with the official number announced in October. The Medicare Part B premium increase that took effect this January is still affecting your check, and if your income has genuinely dropped since 2024, you may be able to request a lower rate. The Social Security Trust Fund is now projected to run short in late 2032, which would mean an automatic cut of roughly 22% to retirement and survivor benefits unless Congress acts, and the debate over how to prevent that is happening in Washington now. If you're a public sector retiree affected by the old windfall elimination provision or government pension offset rules, check your account for a benefit adjustment or retroactive payment. And no matter what changes roll out this year, remember that the government will never call you demanding immediate payment. Anyone who does is not who they claim to be. If this helped clarify what's actually happening versus what's just noise online, consider sharing it with someone you know who's on Social Security or Medicare. Staying accurately informed is the best protection there is. I'll see you in the next one.